looking for me to catch every trade and wiggle. Sorry to disappoint you. We take 2 to 4 live trades a day and talk through them. That's the way it is. Okay, it is January the 6th, 2016, trying to wrap up the trading for today's markets. We had our first sell zone this morning, 80 to 85. It produced a trade right in here, back to the mean green line. Our next sell zone was 90 to 95. Our buy zone was well below the market. And that produced a trade up here, and we were able to talk through this trade coming out there. We were short at 91 and a quarter. Off the F8 screen, you were short in the 92 and a half, 93 area. And if you did it off a 10-minute chart, you were short at 94.50. So great trade location. Didn't get to our number 1 level. Probably means we're going to take out number 1 resistance, go to our number 2 resistance level, hit the outer edges, and it produces a great trade all the way back to 1970. So this last trade that came out of this area, V-top, couple of S's to retest that low, comes out. They took it 3 ticks past that low, and that's the exchange member dynamic gunning stops. Excuse me, price discovery. Don't you love that? We fleece damn near every lamb's account 2 or 3 times till they're broke each year, but we don't call it fleecing the lambs. We call it price discovery. You gotta love that. So what does the big picture show us for tomorrow? Lower high, lower low. So we got pretty good selling 2010. We do have some volume at 87 right here, and I think short term, whichever side of 87 we stay on gives us the next direction, short move. Got support down here at 63, and we broke it out from 43. So 63, then 50, then 43, 45 would be the next little band of support. F1 says find a place to sell it. F2. And as you move out of the middle and K period. And it has produced new lows. So can we close this thing below 1970? And right now we haven't been able to do it, and the 50 lot trader is probably going to have a big say in whether we do or not. Okay, if the market was to close right here at 78, your first sell band is going to be 80 to 85, and your second sell band is going to be 90 to 95. We've got to open it up a little bit because of the volatility. On the buy side, because we are pointed lower, we'll make it 71 to 69, buy 1. I think that's coming out. Next stop is our 63, 65 area, so 60, 65 for buy 2. We do have news tomorrow. Jobless claims, 270. Kind of the default number, isn't it? Gallup, good job rate, 44.9. And I haven't heard that one. Good job rate. Say any job in this day and time is a good job, right? Contrary to what the Fed tells us, 44.9. Bloomberg Consumer Confidence Index, 43.9. Nobody pays attention to this. And in natural gas, we're going to have a draw on natural gas. Last week they drew 58. My guess is they're going to draw 75B or more. And next week's draw will be bigger than that. So the news focus is going to be jobless claims. Friday's non-farm payroll number, probably looking for 200 plus or minus. Let me see where that is. The employment situation, 200,000, 5% unemployment. Private jobs, 193. Work week, 34.5. So they're looking for 200K. I think the short side of the market for indexes makes sense for right now. Haven't seen the Fed do anything yet to step up and really make a concentrated effort to buy the market up. think their role is going to be buffering, keeping the selling from getting out of hand. Orderly markets. The Fed can live with an orderly market. They want to see how low it can go after increasing interest rates. But they do not want it to get down there to its low in 30, 40 minutes an hour. They want to make sure that the selling is tempered. F1, 10-year note. Higher low, higher high. Find a place to buy it. Will that be confirmed on the F2 screen? And new move out of the middle corresponds with the move in the E-mini. We had a P before it. We had a P yesterday. We had a P out of London. Put London and that all together. P with volume above time. Should retest this high end or take it out, and we took it out. So right now, based on where we are, the market was to close. Do not want to be short if the E-mini is selling. We're going to sell failure to take out 28 to the buck. A lot of it's going to be dependent upon the E-mini, then 3 to 7. News focused jobless claims. On the buy side, we came out of the 24 area, so 21 to 25 by 1. And buy 2, 13 to 17. And with all the banks recommending selling the stock market and everything else, harder to remain a believer. The only bullish thing I saw about the stock market was Dennis Gartman came out and said we're in a full bear market right now. Poor Dennis has taken it in the shorts on Zero Hedge. If you haven't followed his enthusiastic group of supporters, got to have very thick skin to be in this business. I often wondered who pays Jim Cramer's salary. Must be the Fed, because he's never seen a stock market he didn't like or a stock he didn't want to buy. And if you faded Jim Cramer's recommendations, you'd be a happy camper. Okay, if we closed right here, we have rejection, so we're going to sell failure to take out 55.20 to 24. Then our next sell is going to be 31 to 03. Got this high over here, I believe, at 5. We're going to lean against that. On the buy side, the rally up started at 06. We're at 18. Got volume at 14. 5 to 9 leaning against the value area low. We'll put a question mark at 13 by 1. And then 25 to 29 by 2. And if the E-mini is selling, we do not want to be short treasuries. Gold is pointed higher. I think gold's going to see 1100 before it sees 1050. Risk off investing. It's driving that market. Higher low, higher high. I've got a low volume number at 1101. So it stops above 1100. We've got a high right there at 94. We got stops above that. Had this spill from 1101. So 94 to 1101 is prime sell territory. Stops above 1100. So selling against 1100 I think represents a pretty reasonable trade. Won't say it's a safe trade. What in the hell is a safe trade, right? Got nothing but P's behind us. We've got a P on the I split. So right now resistance is at 95. So sell 1 is going to be 94, 96. And 99 to 01 for sell 2. On the buy side, the breakout came from 89. So 88, 90 by 1. Last rotate down in A period stopped at 84, so 84, 86 by 2. And if the mini selling, we do not want to be short gold. Okay, crude. I still haven't found that article, but I haven't given up looking for it. But the guy that said $35 crude oil in 2015 says 32 is the bottom, and it looks like we're headed for it. And if the hostilities increase between Iran and Saudi Arabia, who are both masters at having somebody else do their dirty work for them, then the price of oil can actually go lower as they sell crude to finance their war efforts. Lower high, lower low on F1, find a place to sell it. F2, definitely pointed lower. Pretty clean break in the market at 34 and a quarter. We have that Y period low at 59, so 25 to 50, sell 1. 75 to 35, sell 2. On the buy side, 50 to 75 lets them go a little bit lower in London. That is new lows. Really not too interested in the long side of the market. Then 32, 75, 33 for buy 2. And the euro. The FOMC minutes took the euro higher because it showed a weaker economy and that it wasn't a consensus raise interest rates. Maybe the interest rate differential between the dollar and euro won't widen quickly. Cover your shorts in the euro. Exit your length in the dollar. It was an inside day that suggests trading range. I think the direction of the E-mini is still lower. No, excuse me, the euro is still lower. Here's your FOMC minutes. Had a P coming into it, so we rejected prices below 107.50, and we're back up to 8 and a quarter. So sell 1, 825. Let them get stops above the day session. Sell 2, 850. On the buy side, the breakout came at 790, so 775 buy 1, 750 buy 2. And that does it for this January the 6th, 2016. I will see you bright and early in the morning. We had another good day of trading. Stuff works. Y'all have a great evening, and we'll be here bright and early. I'm out of here.